Hi, this is Ed Hermsen with First City Mortgage Group, here to provide you the blueprints on the home loan process. What I'll be covering today in this short video is the steps of getting pre-approved, how to determine what you qualify for, just some basic types of loan programs, the mortgage process from start to finish, and the benefits of using me, Ed Hermsen, for your next home loan. The loan application is the first part in getting pre-approved. I've listed out some items here that you'll need to get to your lender. Obviously, your current address, employment history for the last 2 years, any assets, bank accounts, 401ks, that kind of thing. And also a list of your monthly debts. These are things like car loans and student loans and credit cards, not your monthly expenses like utilities or cell phone bills. Once you get the application, generally the lender will pull your credit, and that will determine your credit score. I would always recommend you ask a copy of your credit report from your lender. After that, the lender should be in a position to tell you how much a home you qualify for, the types of programs you qualify for, and the estimated monthly payment, the PITI. We'll touch on that a little later, but that's principal, interest, taxes, and insurance. And also, depending on the loan program, what the down payment requirements are. How to determine what you qualify for? This is a good question to ask. So it's a simple way for you to calculate this. If you know your monthly gross income, you can take that monthly gross income. So in this example, $5,000. A rule of thumb in lending is you try to keep your total debts under 45% of that gross income. So in this particular scenario, I need to keep this borrower's debt to income under $2,250 a month. Then I go to the last slide there and I subtract out the debt this particular borrower has. They have a car loan of $300 and they have a monthly credit card bill of $120. This determines my mortgage payment, $1,830. Remember that mortgage payment, guys, is a PITI. So that's principal, interest, taxes, and insurance. Insurance has a couple parts to it too, guys. There's a homeowner's insurance, there could be HOA insurance, and there could be mortgage insurance if you put less than 20% down on the home. Going into types of loan programs, guys, this is the general overview. Much more detail once we sit down and go over this, but there are 4 types out there. There's conventional, FHA, USDA, and VA. On a conventional loan, the minimum is 3% down. It's a credit score driven program, which means your rate will depend on where your credit score lies. Maximum loan amount is $417,000. There's fixed loans and adjustable mortgage loans out there, and it does offer less in monthly mortgage insurance comparable to the FHA. FHA, guys, is another great resource out there. It's 3.5% down. You can get a gift or a grant for the down payment. There is a funding fee on this. This funding fee is financed into the mortgage. And guys, the mortgage insurance on FHA is quite a bit higher than the conventional. So it's important you not only look at the rate, but also that monthly mortgage insurance. FHA also has a maximum loan amount, and that's county specific. Next, we go into the 30-year fixed USDA. That's the only option they have. There's income and area restrictions. So these are rural areas, basically towns of less than 10,000 people. And guys, the mortgage insurance is a lot less. And you probably noticed again, 100% financing, so no money down. A VA loan, obviously you have to have your DD-214, so you had to serve in the military for at least 4 years. There's a fixed 30-year and a 15-year loan available. There's no monthly mortgage insurance, and again, VA is 100% financing. Now I'm going to discuss, guys, the mortgage process from start to finish. So you've been pre-approved, you're not with your realtor, you found the perfect home. Now you're under contract. So once you go under contract, I get a copy of that contract from your realtor. At that point, we'll talk in where interest rates are at and lock in your rate for you. I'll remind you to schedule your home inspection. That's one of the first things you want to do as soon as you go under contract. We're also going to set up a time to go over your initial disclosures. And at that time, too, I may ask for some updated documents as well. Maybe updated pay stubs or bank statements. At the next stage there, guys, you'll be looking to get your homeowner's insurance. Now, I can give you some recommendations of agents I use, or if you've got an insurance agent you already have, you'll want to get some quotes from them as well. Then, after that, we'll get the home inspection back. So once that home inspection comes back and you're fine with everything on there and you've worked through the conditions of the home inspection and addressed any issues you had, we order the appraisal. At that point, the appraisal gets ordered, and then it goes to my processing center. So the processing is done to basically do the backside of stuff. They're going to verify employment. They're going to make sure that I have all the paperwork needed. And once that happens, then we get the appraisal in, goes into underwriter. So the underwriter's job is to review everything that we provided, the appraisal, the pay stubs, the bank statements, the credit, to review it and make sure that everything is there and that the loan is viable. And after that, typically what happens, the underwriter may come back with some conditions, sometimes not, but sometimes they do. I will work with you to get those conditions cleared, and then we're set for closing. We always like to send our figures out 3 days prior to closing to the title company, so it gives you the time you have to review the documents and make sure that it's everything you thought you were getting. And that's it, guys. Benefits of using me for your next mortgage. I have over 14 years in the mortgage lending business. I've helped over 1,300 people with their home loan. I'm a preferred lender with CHAPA, which is Colorado Housing Finance Authority, and Neighbor to Neighbor. That's the local agencies that provide down payment assistance programs. My team, so it's important you have a great team. Not only my processors and my underwriters, and all of our funding is done locally here in Fort Collins. We provide clear communication to the loan process, and will be a good resource after closing for if you needed home-related questions, like maybe you needed a good roofer, or maybe you needed a good electrician. I would be a great resource for that as well. I also like to do some post-closing phone calls to you, just keep you updated on interest rates, and just make sure your loan is always going to be in the best position for you and your family. So your next step, guys, if you're interested in getting pre-approved by me, give me a call at 970-690-8276 or email me there at ed.hermsen@mtggroup.com. Have a great one. I hope you enjoyed the video, and take care.